Listen, the CFPB has officially been hijacked. So it is with great concern that I share this with you because we know the CFPB has been very key and instrumental with fighting for the little guy, really positioning people to have an outlet to complain to that can lead to some results, lead to some lawsuit, lead to some compensation, lead to some pressure being applied when people and entities are taking advantage of the everyday individual. But I feel like they have been hijacked because this is not their typical culture. This is not typically what they're about. Typically, they do things that are in the favor of the consumer. But since the CFPB was closed, quote unquote, and I say quote unquote because I still see clients getting feedback from certain complaints that were filed. However, since the CFPB has been experiencing pressure, what has happened is they've taken on a new CEO, and with that new CEO or director, basically, things have changed in a not so good way. I'm gonna show you two different articles that raises great concern and lets me know that they have been hijacked. So the CFPB has dropped the lawsuit against big bank operators of Zelle payment app for failing to protect consumers from fraud. So they're doing the opposite. First they had a lawsuit and it was applying pressure, but now they're dropping the lawsuit that was designed to go against Zelle payment app for failing to protect consumers from fraud. So, CFPB dismisses enforcement action as Senate prepares to vote on repeal of Bureau's rule to supervise digital payment apps offered by Big Tech. So, the Consumer Financial Protection Bureau dismisses lawsuits today against the operators of Zelle and Bank of America, JP Morgan Chase, and Wells Fargo for failing to protect consumers from fraud on the payment app jointly owned by the banks. So pressure was being applied. Now that pressure is no longer being applied. So now Zelle, Bank of America, JP Chase and Morgan, Wells Fargo can continue business as usual. The decision to drop the lawsuit is just the latest enforcement case the CFPB has walked away from in recent weeks as its new leadership halts much of its work. Dismissing this lawsuit against the big banks that own Zelle is another troubling sign that the CFPB's new leadership is dramatically pulling back from enforcing the law and protecting consumers who have been mistreated by banks and other financial firms, said Chuck Bell, Advocacy Program Director at the Consumer Reports. Fraud has become increasingly common on payment apps like Zelle, and consumers have little chance of recovering their money from their bank if they get tricked into sending a payment to scammers. Bell continued, consumers who have been treated unfairly by banks, paycheck advance companies, and other lenders stand to lose billions of dollars in potential relief if the CFPB continues to abandon its pending lawsuits against other financial industry wrongdoers. Now, this is just the article number one. I have another one I'm going to share with you after that, but let's keep going. The CFPB's decision to drop its case against the banks that own Zelle comes on the eve of an expected Senate floor vote to repeal a rule adopted by the CFPB that gives it the authority to supervise digital payment apps offered by Apple, Google, and other big tech companies, just like it already does with large banks, credit unions, and other financial institutions. The Senate is expected to vote as early as Wednesday on a Congressional Review Act resolution, which Consumer Reports urged its members to reject in a letter today. So they're still fighting. Not CFPB, but the Consumer Reports is fighting. And they're just making people aware that the CFPB has been hijacked in so many words. So repealing the CFPB's rule would be a huge gift to big tech, not to the consumers, a huge gift to big tech that will leave consumers largely unprotected from payment app fraud and privacy risks. We need to preserve the CFPB's authority to conduct regular examinations of digital payment app providers to make sure they are following the law and to protect consumers from unfair practices before they become widespread. In 2023 alone, consumers reported losing $210 million to scams on peer-to-peer payment apps and staggering 62% increase from 2021. In addition, users who would accidentally send a payment to the wrong person find it nearly impossible to get their money back. They'd be better off sending money on the blockchain because that's how the blockchain operates. Once you send it, it's over. But with it having banks and FDIC protection, you would think otherwise. So let's dive into the second company that has been let off the hook based on these things. But Let me go over this right here because it ties in some other things. So the CR2's 2020 evaluation also found that consumers using P2P apps face privacy risks because app providers share their personal information widely and make it difficult for users to delete their data. In addition, CR found that Apple Cash, Cash App, and Venmo require users to meet sometimes confusing conditions to ensure their funds held in the payment portion of the app are protected by the FDIC. So it's some unclear things that are taking place. Users could lose money if they haven't completed additional app and product registration requirements, and the P2P companies suffer financial losses or declare bankruptcy. So if the P2P companies suffer financial losses and declare bankruptcies, the consumer is left unprotected. This is unlike banks, which are required to maintain bond insurance. Now let me show you the other company that was let off the hook. None other than Capital One. They also dropped the enforcement lawsuit against Capital One for misleading customers about its low interest savings account. Capital One customers lose potential reimbursements of up to $2 billion. Consumers stand to lose even more if other cases are dropped. So if other cases are dropped, this is just one. It's other cases that was pending against Capital One that can cause them to lose even more money. Attorneys representing the Consumer Financial Protection Bureau today dropped this lawsuit against Capital One, forfeiting potential reimbursements of up to $2 billion for customers of the bank with 360 savings account. The lawsuit is just one of dozens of CFPB enforcement cases against financial companies pending nationwide that may no longer be pursued under the Bureau's new leadership. So they're dropping them one by one, which has halted most activities. One of the CFPB's strongest tools is its ability to enforce existing consumer protection statutes and order companies to refund customers and pay a hefty civil penalty when they are found in court to have broken the law. This is key. So dismissing this lawsuits against Capital One sends the message that the CFPB plans to look the other way when banks and other financial companies mistreat their customers. The CFPB has been hijacked. So we as consumers have to get educated. We have to understand what it is that we can do in order to protect our consumer reports, our credit as a whole, and in many cases get connected to lawyers so we ourselves can apply pressure and file lawsuits. Because the lawsuits is what was causing things to shift and causing things to, at least have them looking over their shoulders, wondering if they could be sued. Now, if they don't have that, no watchdog, then they feel as though they can do whatever. But I'm here to tell you that I believe that the lawsuits are increasing. More people are getting educated on the lawsuits from an individual standpoint and partnering with lawyers to make things possible in their area as well. Consumers who have been treated unfairly by banks, paycheck advance companies, and other lenders stand to lose billions of dollars in potential relief if the CFPB abandons its pending cases. The CFPB's lawsuit against Capital One alleged that it misled customers by promising that its 360 savings account had one of the nation's highest interest rate, but the bank capped the rate while interest rates for savings accounts rose across the country. The CFPB's lawsuit charged that the bank failed to make those customers aware of a virtually identical savings account it created that pays substantially higher interest, as much as 14 times more than the 360 savings account at one point. So here it is, they lied about what they were going to deliver on in terms of the interest rate that it was going to provide in terms of this particular savings account, even though savings accounts rose across the country in terms of their interest rate. In addition to the CFPB's enforcement lawsuits, there are a handful of other cases in the Federal Appeals Court related to consumer protection rules issued last year by the CFPB, which the Trump administration has already indicated it will stop litigating. Those rules include limits on credit card late fees and bank overdraft charges that together would save consumers an estimated $15 billion annually. And I know they say the Trump administration, but there's so many things going on that it's the administration, but it's caused by some other entities as well. So we got to be aware of who's doing what and what the agenda is and how do they benefit by what it is that they're doing. And is the consumer benefiting? Because if the consumer isn't benefiting, then it's working against us. And the CFPB, I feel, has been hijacked. And as a result, they're going the opposite way. So we have to get educated. We have to be empowered. And there are things that I'm going to share on this channel that I feel can empower many people to be able to take matters into their own hands to a degree, but also have some ability to be able to apply pressure when need be even if we don't have the CFPB. If you like this video, you know what to do. So do what you know. Mr. Smith signing out. Salute.